Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Monday, May the 2nd, 10 minutes after market close here in Jacksonville, Florida for 11 p.m. Eastern time. And today was quite the volatile day. We saw defensive sectors absolutely get waylaid earlier in the day. Areas like real estate, utilities, staples really having a tough go of it today. That's what I mean when I say defensive sectors crack. S&P took out recent lows, but we got a really vicious bounce into the end of day. We're going to look at all that stuff. We're going to look at what stood out, what was strong today, what was really weak. We're going to get into those charts here in just a second, but let's go through performance real quick. So as you can see, the risk on kind of part of the market leading today growth, which it is important to note, basically for the better part of the last month, anytime we've seen risk on / growth or the big tech type of names have a really strong day, that has usually been followed by extreme weakness the following day. So keep that in mind as we go through the charts. We're going to look at that and kind of talk about what that looks like. But G6 up 1.82%, S&P up a little over 0.5%, QQQ up 1.67%, Dow up 0.25%, mid caps up a little over half, Russell 2000 up about 1%, 60/40 up about 0.1%, and Grow basically flat on the day, although we did initiate 2 new positions. We're going to get to that in just a moment. But before we do that, market state remains in a correction and the trend gauge remains the same as well, meaning we're in downtrend / bearish here on all time frames as well as market leaders. So no changes to trend gauge, no changes to market state. Before we get to the tail of the tape and before we get into these charts and look at some of the crazy price action that we saw today, let me quickly highlight Revere and let me highlight my email too. If you have any questions on anything I cover in this video, you want to know more about something in particular, just send me an email. I'll happily respond and answer any questions you may have. Or if you're interested in what Revere does, what our strategy is, how we manage money, etc., you can email me or Don at revereasset.com, Tim, Dan, or Merrill at revereasset.com. So let's get into the tail of the tape here. And I'm going to minimize these. And I've got the S&P 500 over here on the right side of my screen. I'll refresh that here in just a second to get that candle looking right. But first, let's run through these. Market state, like we said, still in correction. Headwinds remain the same. We know that. And that's especially important because we have a Fed meeting coming up on Wednesday. So that's in focus this week as well. Interest rates also making a strong move up towards that 3% level on the 10-year. That's something we've been talking about as well. Sentiment, we're kind of hanging out in a similar area to where we were to close out last week. Put call ratio still in that same vicinity. 1.23 is where it closed at today. That is elevated on a normal basis. If you look back over the last year, we haven't been over 1 a ton consistently, but we kind of started to do that recently. VIX tagged around 36 today, pulled back off of that. I mentioned the market had a vicious bounce into the close. That caused the VIX to pull back into the end of the day, closed at 31.74, down about 5%. And the fear greed actually creeped up a tiny bit to 29 from 28 last Friday. So we are still below all major moving averages, as you can see here with the S&P. So we have not reclaimed any moving averages since we failed here on 4/14 and then confirmed that on 4/22. So here we are. We have a nice strong bounce today after being down about 1.6% with about an hour left to trade. The S&P ends up finishing up almost or a little over 0.5%. That is a strong move for the S&P, and you don't see 2% moves in the matter of an hour very often on the S&P, but that is what we saw today. What was the news today? I mentioned interest rates new highs at 10-year tagging 3%. That was kind of a big focus today. It looked like maybe it had found a little bit of resistance last week. Maybe the TLT was starting to have some safe haven demand, but not so much the case. Interest rates continue to just grind higher. What were we watching today? S&P versus resistance, 4160 to 4200, failed into that resistance level. And then here, this support, the 224 low, 4115, we were under that for a good bit of the day. Undercut and reclaim, as you can see. We did that twice at support. So at the end of the day, we're back above this 4115 level. Although we did spend a significant amount of time today below it, that vicious rally into the end of day gets us back above that level. So what were we watching as far as individual stocks and third leg down panic washout? 50-day down 9 to 10%. that would have been around the 4,000 level. As you can see here, 50 days right here at like 43.77. So about that 9% range would be roughly this 4,000 level. Has not quite gotten to that panic level like we saw here and like we saw here on the S&P. 50 SMA wise, you can see some of these oil names holding up pretty well, but a lot of names that have failed at their 50-day moving averages. Berkshire is a good example. Costco is a good example. Those names had really tough days today too, as staples and utilities and the more defensive stuff did not do so well. Action wise, we opened just slightly green, a volatile 1%, 30 minutes, quick move down, as well as quick move up early this morning. Failed into that resistance, like we said here, trended lower basically for the better part of the day, really for, I'd say from about 10 or 11 o'clock all the way till about 3 o'clock Eastern. And then we had this vicious bounce into the close. So what we're going to do now is we're going to pull the S&P on a 5-minute here so you can see what we're talking about. So you have this strong move up here, get shut down, have this nasty move back down. This is that nasty 1%. We go up about 1%, down 1% in just a very short period of time here. And then we kind of consolidate for a moment, trend lower pretty sharply for the rest of the day. And then all of a sudden, right here, pretty much at 3 o'clock, you can see the S&P goes from about 4,070 all the way to 4,150 in that last hour. So a very sharp rally happened really out of nowhere. Things were looking pretty bleak in this area, but a strong bounce into the close. As you can see there, it's going to look very similar on a lot of stock charts as well. But that's what we mean by that strong rally into the close. Notes this week, Fed meeting on Wednesday, jobs report Friday. Those are important things to keep in mind, particularly the Fed. We know the market is always paying attention to that. S&P opened just slightly green, finished up 0.6% roughly. G6 up 1.8, 60/40 up slightly, grow basically flat on the day. Sector-wise, dollar, banks, biotechs, pretty much green for the entirety of the day. Some red to green reversals. PDBC, that's a commodity index. That's actually something we bought today, a small position. It has exposure to lots of commodities, agricultural, oil, etc. We also saw the Chucky ETFs, XLCKNY, that's your communication, technology, and discretionary, end up finishing green today. USO green. We saw SOX go from green to red and back to green and end up being one of the strongest sectors on the day. And obviously, I say all this just kind of gives you some insight into the volatility that went on in the markets today. On the bad side of things, bonds, gold, silver, miners not having a great day. This is really where the weakness was today. Utilities, staples, healthcare, and real estate, as well as steel and copper not having a good day. So portfolio-wise, we actually did make some buys today. We bought 10% VTIP. That is a inflation-protected ETF there. This very, very non-volatile, has a beta of -0.01, so not very correlated to the market at all. And then I mentioned we bought a small position here in PDBC. That is a commodity basket that has exposure to a number of different areas in the commodity space. So bottom line for today, you get a positive close, you get a vicious rally into the close, but the volatility and the risk remains extremely elevated, not only on stocks, but on the actual indices themselves. Moving along here, today's close 41.55. We undercut the lows, volatile action, but sharp end of day rally. That 41.15 level, that is an important spot to watch. Like you can see right here, undercut and reclaim twice today. We do have these moving averages not in our favor, pushing downwards now on the 50, 43.77, 21 EMA, 43.30. We're starting to see that 200-day start to roll over too, very close to that. So keep that in mind as well. So let's go ahead, get into the charts. I know we just looked at the S&P on a 5-minute. Let's look here on a daily. As you can see, we undercut these lows, but we ended up closing above them. So came down, undercut the lows, closed above, but we're still really not making any type of progress. And one of the main things I want to point out here is we've had a couple of days just over the last week where we closed at the top of the range, but those days were not necessarily followed by anything good, as you can see here and here on these days. So this is Friday, this is Tuesday, but the S&P sharp bounce at the end of the day with the rest of the market. But keep in mind, when we've seen sharp bounces, especially when they've been led by technology and growth, those have not lasted over the last month or so. Those have typically been followed by extreme weakness. So just keep that in mind. We're going to go to the Qs right here and also look at basically the same thing. So important to note, we never were able to really get a definitive close through the declining 8 EMA. And I want to show another thing here. You see how we closed at the top of the range here on Monday, closed at the top of the range here on Thursday. Both of those days were followed by really nasty days. So this right here is Tuesday, QQQ down 4%. This right here is Friday, QQQ down 4.5%. This is what I mean when I say the bottom line is it's a positive close, yes, but volatility and risk remains extremely elevated. So the Qs undercut these lows already last week, but trying to get back up into the moving averages here potentially. You can see QQQ up about 1.7% today. That 21, or excuse me, the ADMA is right there around 323 on QQQ. On SPY, it's right around 423. The Dow, not really a leader today, but it did finish green, and it still is yet to undercut its 224 lows, unlike the S&P and unlike the Qs, which have already done it. The Dow Jones Industrial Average has not done that quite yet. So similar candle like you're going to see on all these indices today, went through and broke the lows, pushed down to the downside from where Friday was at, and then at the end of the day, a sharp rally to get back up into those candles. DIA, that 8 EMA right there at 335. IWM, like we said, it's going to look really similar. Undercut the recent lows, got below Friday's low, but at the end of the day, a strong rally back up into this range. So now what you're looking for, you're going to, on all the indices here, what happens at the ADMA? We failed at it so far, haven't been able to get back above it. Any type of move above the ADMA, especially a strong, definitive move, decisive move above the ADMA, that would be something to take notice of. But for the time being, we are still, we have not gotten back above it, and we've struggled with it when we ran up into it. MDY, lastly on the indices here, bounced off this 450 level after undercutting its recent lows, and pretty much the same exact scenario here as you see with all the other major indices. Going to want to keep a close eye on this ADMA. Are we able to close above it on any of the major indices, and can we get a definitive close above it? That 8 EMA often a very good guide, at least on the short to intermediate term trend. So let's move along here to some stocks. But before we do that, let's take a look at the 10-year note. Since we mentioned it was running up to 3%, here you go. Pull back last week, like I said, looked like maybe it was going to chill out for a little bit, closed below the ADMA for 3 days or 2 days in a row here. Hadn't seen that happen in a while, but the trend continues just right back up, powering through right here at 3% on the 10-year note. As far as positive stocks go today, like I said, a lot of the growth type of names were in that positive group, names that finished strong, like AMD, up about 5% today. But you can see these aren't the most constructive looking charts here. These are down near lows. They've been sold off pretty hard, but just keep in mind that is what was strong today. AMD, NVIDIA, up about 4 or 5% as well here. Tesla, also having a big day, very volatile day for Tesla per usual, but Tesla up about 4% right up into that 200 day. So these are some of the stocks that were leading the markets today. Facebook, another one, up about 5% today. And you can see here back closing above those key moving averages, the 50 and the 21 there. So some of these big tech names leading the way, while some of the more defensive areas really struggling today. We also saw oils make a nice comeback. Oxy up about 6%. You can see this is a strong candle here to get back above the 21 and the 8. CVX also finished really strong, up about 2%. Hasn't quite gotten back above those key moving averages, but it is showing some decent action today, up about 2%. We saw a lot of the oils end up coming off the lows pretty nicely, but not all of them finishing green. CUTR, this is Cutter. This is a relatively new company, and it is green today. And I say relatively new to the scene in regards to this big time move it made here. Caught a lot of people's attention. Had a pretty nasty sell-off, but up about 11% today, bouncing off this 50. There's some big volume here, something going on with this name, but just keep in mind, this is a very volatile name here. Nasty sell-off here over the last couple of days, but a big bounce today off of that 50-day moving average. OLN, and some of these are off Don's survivor list. I just wanted to go back and touch base on a few of these and see how they fared today. OLN fared well, up about 2.5%. Just inside day here after the gap up on Friday, as you can see here. So OLN, pretty solid action today. I mentioned we took a position in VTIP. That is a short-term inflation-protected bond fund. So this looks very volatile, but this is only a very small range, as you can see, 52 to 50.5. We took a small position, or a position in VTIP today, and we took a small position in PDBC, a commodity ETF here, as you can see with this strong candle as it bounced off or undercut the 21 and reclaimed there. We also saw, like I said, high beta / the tech names leading. A couple of those high beta names here to just use as an example. Upstart up about 12%, as you can see. Bros, another high beta name that's pretty popular, up about 3%. So this is what I mean when we see some of these beaten up growth names today showing some strength, at least for a 1 day or 1 day worth of strength. And we also saw Ulta, which I believe is on the survivor list, act pretty well today too, up about 2.5%. Didn't quite get above the 21 EMA, but trying its hardest. So moving along here to the bad, and a lot of these ended up finishing well off the lows, but they're still red today. So Delta Airlines all the way back to the 21, it did bounce into the close along with the rest of the market, was down about 2.5 before that last hour of trading. And United, basically the exact same scenario, was down about 2.5% prior to that last hour of trading, but did finish above the 80 EMA, but still down on the day, showing some weakness in the travel sector today. But really what's important today is the way these sectors acted. Look how wide this candle is here on XLP. Even though it's not that wide of a price, it's 78 to 75. This is pretty extreme volatility for the staples ETF. You don't normally see this. And over the course of the last 2 days, these have really had a nasty move down. You can see here from about 80 to 76, 75 on XLP. XLU, a very similar look to it, actually a little worse. Nasty move just from 77 right here all the way back down to 70. That's a sharp move for this ETF. This is typically more stable, less volatile, but not so much the case the last week or two. XLRE, nasty sell-off as well. And the main thing I want to point out here, look at the volume on these names or on these sector ETFs. XLRE almost 200% above average volume, just selling off brutally here over the last couple of days as well. You can see from 51 back to 45 here, so about a 10% move in about a week and a half on XLRE. So some of these defensive sectors, which had held up well and we had seen money flowing into, just getting taken to the woodshed over the last couple of days. Another example of one of those defensive names having a rough day, Waste Management. This is one that had looked pretty good. Last 2 days, just pretty brutal, down 3% on Friday, down another 3.5% today. And this is just an example, and I wanted to provide some color here. We also had Amazon and Apple, which were weak all day long, make extremely strong recoveries into the end of the day. Apple actually ends up finishing green. But what I want to point out here is something that I think is imperative. And maybe if you take nothing away from the video, you take this little tidbit. Apple is starting to live under the 200-day. And this is something that Apple has not done really since the COVID crash in 2020. So you can see we've now got 1, 2, 3, 4 out of the last 5 closes are below the 200-day. Apple has not had 2 consecutive closes below the 200-day since the COVID crash. So that is certainly a change in character. Although it may be extremely technical based, I do think this is important. A lot of times that 200-day is a really big guide for the longer term trend. And Apple is just now, it's starting to live below it. Maybe it reclaims it tomorrow, who knows? But I just want to point out 4 of the last 5 closes on Apple below the 200-day. We have not seen Apple do that at all for the last 2 years. Hasn't had 2 consecutive closes below the 200-day for the last 2 years. Moving along here just to the last few. Nucor, we mentioned steel having a tough day, metals and mining type of names having a tough day, down about 3%. And Berkshire Hathaway also down about 2% or so today, but some pretty wide candles. You can see this is a defensive name, same type of deal as we saw with utilities, staples, real estate. Pretty sharp move down over the last couple of weeks, or maybe even week and a half here on Berkshire. So The defensive area is starting to take it on the chin. Obviously, a lot of the growth in technology has already been punished, but we're starting to see that kind of spill over into some of the more defensive areas that had held up. So that is going to wrap up today's video. Thanks for listening, everybody. I will see you on the podcast this week as well as Thursday's video. So have a great week, everyone.